Welcome back to Explain the Charts. Today, August 3rd, 2025, we're zeroing in on the BoE currency pair for a comprehensive look at what's driving its movements in the Forex market. Current market sentiment is heavily influenced by the looming Bank of England interest rate decision, widely anticipated to deliver a 25 basis point cut this coming Thursday. Such a move, indicative of monetary easing, would typically signal a weakening of the British pound as its yield attractiveness diminishes relative to other currencies. However, recent news from the US offers a powerful counter-narrative. A weaker-than-expected US labor report has sparked a notable rally in BoE, driven by a renewed bout of US dollar weakness. This dynamic creates an interesting and complex interplay between fundamental factors impacting both sides of the currency pair, setting the stage for potential volatility. Let's begin our technical analysis on the daily chart, examining price action from March 2024 through August 1, 2025, to grasp the overarching trends and significant levels. From early 2025, we clearly observed BoE embarking on a robust uptrend, steadily climbing from lows around 1.22 in January, a strong recovery from previous periods. This bullish momentum continued for several months, eventually peaking in late June 2025, where the pair reached a significant high of 1.3771. This 1.3771 level is extremely significant, as it closely aligns with the reported 2022 high of 1.3749. Serving as a formidable long-term resistance point where buying pressure evidently exhausted. Following this peak, the market experienced a notable reversal, effectively breaking what many analysts describe as its yearly uptrend from January, leading to a sustained downtrend throughout July. The period saw consecutive daily declines, though the six-day losing streak, mentioned in some news sources, was perhaps part of a broader bearish shift rather than a perfectly unbroken run in our specific dataset. However, our latest available daily candle for August 1, 2025, paints a distinctly different and more immediate picture. It closed strongly green at 1.3277, representing a significant 0.53% gain. This impressive surge precisely matches the outside daily reversal and rally highlighted in the news, directly fueled by the weaker U.S. labor report and subsequent U.S. dollar selling pressure. This immediate rebound showcases the market's sensitivity to macroeconomic data, pushing the pair back above the crucial 1.3250 level. Transitioning to the 15-minute chart, which holds the most recent price data up to August 1, 2025, 2047 Universal Time Coordinated, we gain a granular view of this short-term rebound and recent intraday volatility. Observe the sharp decline preceding the August 1st rally, with prices falling significantly from highs around 1.34 to 1.35 in late July, indicating intense selling pressure over multiple days. The very bottom of this recent move on the intraday chart can be precisely pinpointed around 1.3185 early on August 1st, forming a clear capitulation point. From there, a powerful surge of buying activity propelled the pair higher, showcasing clear signs of a short-term bullish reversal as liquidity entered the market. This rapid ascent confirms the significant and immediate impact of the U.S. labor data, allowing BoE to recover substantial ground and re-establish a foothold above prior resistance levels. For nimble intraday traders, the 1.3250 level now appears to be acting as immediate support, a critical psychological and technical threshold to watch for pullbacks. Looking upwards, short-term resistance is likely to be encountered first around the 1.3300 psychological level, a natural target for profit-taking, and then the more significant daily resistance area we discussed earlier, near 1.3434. Volume analysis on this specific time frame can offer further clues. High volume during these upward moves strongly indicates conviction from buyers, reinforcing the validity of the rebound. A measured pullback towards 1.3250, followed by renewed buying pressure and higher volume, could present a potential entry point for short-term long positions, with prudent stop losses placed just below the August 1st intraday low. Conversely, if price struggles to hold above 1.3250 on this time frame and pushes decisively lower, it would signal that the immediate bullish momentum has faded, potentially resuming the broader downtrend towards 1.3200 and below. Now, let's briefly look at the 1-hour chart, specifically the data range from July 14th to July 17th, 2025. It's important for viewers to note that this particular dataset precedes our most recent daily and 15-minute candles, serving as historical context rather than current market action. However, it offers valuable insights into price behavior during that mid-July period, clearly demonstrating a phase of sustained bearish pressure. Within this specific window, we can identify consistent formation of lower highs and lower lows, indicating a well-defined short-term downtrend and the building momentum of sellers. This reinforces the overall narrative of weakness that developed throughout July, culminating in the more pronounced declines we observed just before the August 1st rebound. It vividly highlights how quickly a short-term trend can establish itself and build significant momentum, often foreshadowing larger moves on higher timeframes. So, what does this all mean for the short and long-term outlook of BPUSD, and how should traders position themselves? From a long-term perspective, the overarching bearish sentiment, stemming from the broken 2025 uptrend and the anticipated Bank of England rate cut, remains a dominant and significant factor. The price is substantially below its June highs, suggesting that sellers largely retain control of the broader market direction. Reasons to be bearish in the mid to long term include a confirmation of the BoE's dovish stance, particularly if the central bank signals further easing beyond this expected 25 basis point cut, which would further devalue the pound. Additionally, any renewed strength in the US dollar, perhaps from better-than-expected future U.S. economic data or shifts in global risk sentiment, would quickly reverse the recent rebound. If the price breaks below the immediate 1.3200 mark, and especially if it closes decisively beneath the key support cluster at 1.3092 to 1.3044, it would confirm a deeper decline, with potential targets extending to the psychological 1.3000 level, then 1.2903, and even a retest of 1.2773. The likelihood of testing the 1.3000 support level in the medium term, particularly following the BoE announcement, is quite high, estimated at approximately 65 to 75%, given the underlying fundamental pressures. On the flip side, reasons to be bullish, especially in the short term, primarily revolve around the continuation of US dollar weakness. It's plausible that the market has already largely priced in the expected BoE cut, thus limiting its immediate downside impact on the pound. A sustained breakout above the immediate weekly resistance at 1.3434 would be a robust bullish signal, suggesting a potential retest of higher levels like 1.3648. The probability of BPUSD retesting 1.3434 in the short term, assuming persistent US dollar weakness and no further unexpected negative UK economic data, stands at a moderate 45 to 55%. For true long-term bullishness, a sustained weekly close above the 2022 high of 1.3749 would be unequivocally required, signifying a complete uptrend resumption and a major structural shift in the pair. However, this scenario appears less probable in the near future, perhaps only a 15 to 25% chance without a dramatic and unforeseen shift in global monetary policy or a significant improvement in UK economic performance. When deciding when and what price to trade, always prioritize and consider the upcoming Bank of England interest rate decision on Thursday as the singular, primary catalyst for the next major move. Closely monitor the daily and 15-minute closes around the crucial 1.3200 to 1.3300 range, as sustained breaks above or below these levels will clearly indicate the immediate direction of momentum. Also, pay close attention to the overall market sentiment towards global risk and safe haven assets, as shifts in these dynamics significantly impact both the British pound and the US dollar. Volume spikes, particularly during decisive breakouts or breakdowns, can add strong conviction to a price move, validating its strength. To summarize today's comprehensive analysis, key price levels to closely watch are the immediate resistance at 1.3434 and crucial support levels established at 1.3092 to 1.3044, followed by the significant psychological 1.3000 mark. The market's reaction to the forthcoming BoE decision and the ongoing stream of U.S. economic data will be absolutely paramount in dictating the path of least resistance for GBPUSD. Always prioritize robust risk management strategies and consider using appropriate stop-loss orders and profit targets based on these identified key levels to protect your capital and lock in gains. Thank you for joining us for this in-depth analysis on GBPUSD. Don't forget to like, subscribe, and hit the notification bell for more real-time market insights from Explain the Charts.